Google stocks is currently valued at 1,000 USD just for one unit. It is almost impossible for a normal person to participate in such an investment, am I right? What if you only have 100 USD in your pocket? Can you still participate in Google stock investment? The secret is, you can. And let me share that with you today.
Crazy mother.
So what is CFD? CFD is a derivative investment tool. It is actually a contract that is being set between you and the broker. So when you buy an investment via CFD, you don't buy the investment, you buy a CFD. Sounds a little bit confusing, right? So let me just give you a very simple explanation. So what the explanation about what CFD is that I like to use for people in Malaysia is this. We all know that in Malaysia have Toto, right? There's two ways of buying Toto. One is you go to the official shop and buy Toto, and number two is you go to the coffee shop just down the road of your house and look for an uncle who sits there who you can buy Toto from. The result is the same. Tomorrow when you look at the newspaper, if your number comes out, if you bought it from the official channel, you can claim from the official channel. But if you bought from the uncle in the coffee shop, you can go and claim it from the uncle in the coffee shop. So when you're investing in a stock through CFD, it is almost the same like you invest in Toto through the uncle sitting in the coffee shop. However, one difference is CFD is a regulated instrument and Toto Underground is not really regulated. CFD is a contract between you and the broker where it allows you to participate in the price movement of the investment of your choosing. So why do people want to invest in a stock through CFD, which you actually don't own the stock, right? Might as well you invest in something and own it. Why do people want to do that? Leverage. It is the reason why CFD is getting more popular among investors. Let me show you how it works. Let's say you have been studying Amazon stock. It is currently priced at $1,000 per unit, but you are very confident that in a few days the price will increase by 10% to $1,100 per unit. Your goal? You want to profit $1,000 through this trade. So, to achieve that goal, you have to buy 100 units of Amazon stock. Scenario A. You use a normal stock brokerage account. What you need to do to buy 100 units of Amazon stock is to deposit 100,000 USD into your account. 3 days later, Amazon stock went up as predicted to $1,100 per unit. So what you do is you sell off the 100 unit of Amazon stock and you profit 1,000 from this trade. Scenario B. You don't have 100,000, but you have a CFD account, which your broker gives you a leverage of 100 times. Since you only have $1,000, with 100 times of leverage, you only need to deposit $1,000 into your brokerage account to buy 100 units of Amazon stocks via CFD. 3 days later, Amazon stock went up as predicted by you to $1,100 per unit. So you close your trade with your broker and now you profit 1,000 from this trade too. Both made $1,000, but there's a huge difference in capital. Scenario A, you use 100,000 to make 1,000. That's 10% profit. With scenario B, through a CFD brokerage, you use $1,000 to make $1,000. That is 100% profit. But do remember this, the leverage facility can really magnify your earning and make a lot of money. It can also magnify your losses and make you lose a lot of money. So when you trade with leverage facility through the CFD brokerage, please be very careful and please be very sure of what you're doing. Do remember that 65% of the people who trade with CFD tend to lose money. CFD allow you to invest in both directions, buy and sell. Unlike traditional stock investment, all you can do is buy at a low price and sell at a high price. But when it comes to CFD, you can buy at a low price, sell at a high price. You can also sell at a high price, buy at a low price. So this allows investors to make money whether the market is going up or whether the market is going down. You can make money either way. Now finally, this is one of my favorite reasons of investing via CFD, which is the low barrier of entry. Let's say you've been studying Apple stock for the past few weeks And what you find is that it's actually a good time to start collecting Apple stock because you believe now is the right time for you to go into the market and you think that the price will increase in the near future. Now, after doing all your homework, you're very confident and now you want to buy the stocks, but you have only one problem. You don't have enough money because Apple stock is currently being priced at 150 USD just for one unit. All you have is just 100 USD. But you're very confident that this stock is going to go up in price. So what can you do? You can invest in Apple stock through contract for difference. So now let's say when you want to buy Apple stock through a CFD, what happens is you can buy it at whatever amount you wish, and if let's say Apple stock go up by 20%, your value of your CFD would also go up by 20%. If the price of Apple stock drop by 20%, your CFD will also drop by 20%. It will go hand in hand like that. So this is what it means by you are able to participate in the price movement of the underlying asset without owning the asset. Even though I only have 100 USD or 200 USD, I can buy both Berkshire Hathaway, Google, Prudential UK. All these stocks are very expensive, between the range of 200 USD to £1,000 per unit of stock. But only with a very small amount of money, I can choose to have this kind of stock in my stock investment portfolio through CFD. So if you know what you are doing, CFD can really benefit your investment to help you diversify for your investment portfolio at an affordable amount. CFD allow you to set your investment amount based on your affordability. If all you have is 100 USD, you can just purchase 100 USD. Another benefit of CFD is that it has a wide range of investment assets that you can choose from. You can choose to invest in US stock market, UK stock market, Hong Kong stock market, Singapore stock market, gold market, commodity market, oil and gas, or even Bitcoin, cryptocurrency, Forex, anything you wish, all through the same brokerage. Because remember, all you're investing is actually CFD. They just track the movement of all these underlying assets. So it makes it very easy for you to participate in any form of investment. This gives you a wide range of choices of what kind of asset you want to choose to invest in. One of the main reasons that CFD is gaining popularity among people is because of its margin facility, as we mentioned earlier. If you're going to invest and you can get quite greedy, remember, the more you earn, you can also lose. But one of the main reasons why I like to use CFD and why I will recommend people around me to use CFD at times is for the reason of low barrier of entry, because this gives you a very cheap way to diversify your portfolio. If you want to diversify your portfolio among different blue chip stocks, you need a lot of money, and not many people have that much of money sitting around in their bank account, right? So, and this doesn't mean that if you have no money you shouldn't invest. So CFD gives you the opportunity to invest even when you have very little capital. It allows you to build a diversified portfolio in a very cheap way, in an affordable way when you are going to use CFD. So that's one reason that I like to use the CFD. So that's it for today. Thank you very much for watching. If you enjoyed this video and you find it beneficial for yourself, please like the video below and click share to share it with your friends and help your friends to invest as well. So I wish that you're going to make more money in 2019. Thank you very much for watching. See you next time.